guys, and welcome to another edition of Market Marauders. Beating the market, one trade at a time. First things first, smash that subscribe button down below. Like, comment, share. Now, if you're new to Market Marauders, this is a financial investment channel. Its goal is to help investors and to make better uh, moves in the market. So if that interests you, hit that subscribe button. Every week, I give my top 3 option picks for the week. And if that's something that interests you, then stay tuned. So, another thing is reading is very fundamental, in my opinion. So, I have some links down below if you're a new trader for some books that I'm recommending. Everybody should read. They're all good reads. Um, Starting out investing can be a difficult challenge, but the more information you know, the better you can be as far as a trader. So, click the links down below and check some of those books out. They'll sure to be a good read. Now, jumping into it, my top 3 option picks for the week. I got number 1, no specific order. We got NVAX, Novavax Incorporated. So, if we look at them, their moving average 50 is $7.16. Moving average 200 is $5.59, and they ended the week on Friday at $12.48. So this is based on Friday's price point. So depending on when you watch the video, this price is going to be different. So the market's going to open on Monday, so this price is definitely going to be different compared to where it was. But for now, it's Saturday, so the market is closed. So this is the price that it'll be. So just bear that in mind for you guys who watch this video throughout the week. So jumping into their 5-day chart, let's click on the 5-day chart. We can see they had a pretty big lull. They went all the way down to $9.90. So like, well, yeah, about $9.96. But then they came back up and they shot up all the way to $14.02. And then they ended the week at $12.47. This says $12.48. This says $12.47. So we're gonna go with $12.47. Just be on the safe side. Their earnings is actually in 4 days, so look forward to that. And my goal with these videos, if it's your first time watching, I always try to give some background information on the stocks, not just telling you, hey, these are my top picks, and no reason for giving you the top picks. So with each one of these, I give information on some of the background things they're doing, press releases, all things that are public information anybody can look up. But sometimes the hardest part is you found a stock but you don't know where to look for information, or you don't know what the company's actually doing. So this is just a little insight on what the company's actually doing. So going into the company's press release, one of them, so they're developing a vaccine. So if you guys have been following the news, a bunch of stocks have been trying to develop vaccines for this. And so, the more companies that do, the more their price raises. So this is just added to the list of one of those companies that are all involved in trying to find a vaccine as fast as possible. So that's one of the reasons why I picked them as one of the option picks. And I think, any company involved in that race to find a vaccine will definitely be profitable in the long term. Secondly, why I picked this is they actually have an earnings coming up on the 11th. So if you guys are new to investing, never done a conference call, this basically is a conference call for every company that's publicly traded. They'll have a press release on their website for when they give their conference calls. Now, these are usually quarterly. So every 3 months, they'll give an earnings call or a conference call, and you as an investor, even if you don't own the stock, you can call in and see what's going on with the company. And I think they're very advantageous for any investor to call into these. There's also a webcast link down here. So this is just on their website. You type in press releases for Novavax, and it'll come up. So that's one way to find it. It tells you the time, 4:30 p.m. Eastern Time. It gives you a number for domestic and an international number. And then it gives you a passcode because with these you have to call in, you have to type in the passcode. So you call in during the time, you give the passcode, or you go in here. I've always done mine on webcast, and usually a webcast just asks you your name, like where you work, and your email address. So it's not too personal of information, and then it'll send you to a portal where you can actually listen to the call. These are very important because there are a lot of times after the conference call, they'll do a release of usually like a PDF of the financials. But there are a lot of questions that are asked during the conference call that they don't publish. So they don't publish the questions that are asked by investors during the conference call. So it's only strictly financial information that they were going to go over during the conference call. So during their QA period, if you're not one of the people who are able to get in and actually be one of the people who ask the question, then if you listen to the question and get an answer, just make sure to write it down because that stuff's not going to be published when you have the press release come out for the actual earnings itself. Now, some of the things in there may be answered, but questions that you may have, they may not. There's no guarantee that they're going to answer them and have them displayed for that press release. So. It's always good to listen to these, and they're free. It don't cost you anything. Just call in or go on the website, and the links are usually in there for the different press releases. So, uh, jumping into Robinhood, yes, yes, people are saying, "Oh, you still use Robinhood even after all the stuff they done?" Yes, I made a whole video about my grievances on Robinhood and that 2 days of horror when nobody could trade on Robinhood, and it was such a crucial day to trade on Robinhood. Trust me, I lost money too. I lost quite a bit of money. I had a couple of Tesla calls. Um, Cost about 2 grand on those. But stuff happens, and you just live and learn. If you guys got burnt on Robinhood, and you just don't want to use them anymore, you know, more power to you. But I've used them so far, and even with my 2 grand loss, I'm still using them. Now, I know in the comment section you're gonna be like, go to Weeble, go to all these other different places, Tastyworks. Yeah, I'm in the process of trying to, discover those platforms, but I haven't personally gone on them yet. So as of this date, I'm still using Robinhood and still chugging along because it makes the most sense to me. So going into Robinhood, for you guys who stayed with Robinhood, um, and then also I had a couple of stocks that I had a really good entry point in, and I just didn't want to sell them because they're very profitable now. But anyway, going into Robinhood, I would definitely have a call for this one, and I'll put my call out for like April 3rd, or maybe even a little further than that. But April 3rd is a pretty good date because with companies like this, vaccine companies, the kind of niche market that they're in. Any new press release shoots these stocks up through the roof, and they always break out after that. So, having a pretty good entry point um, before that actually happens, and giving time for that to happen is always a good thing. I know April is a deadline for a lot of companies that they're saying by April they're going to have a vaccine. So the April time frame, is kind of sensitive for a lot of people in that field. So I would say in April, there's expect to see a lot of companies making press releases about their progress on vaccines. So no, for me, I think a good entry. Well, it's at 12:59. I think a good entry for me, I would say, for the call will probably be around the $18 range to $16 range. Now, for you guys who've never traded options before on the Robinhood platform or any platform in general, this is the strike price. This is the price you believe that it's going to go um, up to and above. So this is what you believe when you buy a call. So when you're buying a put, it's the complete opposite. You believe the price is going to go down to a certain value, and then once it gets past that value, your profits start to gain. Even before then, you get profits, but that's when you get the really big jumps in profit. Now on here it says $1.75 per share. So a contract is 100 shares. So for each contract, when you buy one contract, it's the agreement to buy 100 shares of a stock. So you're buying 100 shares at 175. So when you buy the contract, you're paying $175 for that one contract. So you'll pay $175 that you believe that by April 3rd, which is when the contract expires, that the stock will go to $18 or above $18. And then vice versa. So on our other limit, $2.08, that's $208 that you believe that the stock's going to go up to $16 and above by April 3rd. So that's just a small synopsis of, how options work, and that'll get you started and get your foot in the door for, you know, trading options. So those people out there who are like, you need hundreds, millions of dollars, you need, you know, have a savings fund of $10,000 before you begin investing. That is not true. So, to those people out there who keep telling people that, shame on you. Shame on you. Because you don't need that much money. And if you want to be, really risky, uh, the higher you go with options, the cheaper the price, and that's just because that's the lower the probability that it will actually get to that price. So if you see on here $75 that it'll get to $29 by April 3rd, but this percentage right here is actually increased a lot. And this just means, that its volatility is really high, because with these companies, just they're one press release away from just blowing up, and the stocks shoot up to that amount of money. But me, when I try to make these investments, I try to make them as conservative as possible. So that's why I say 18 to 16 dollars is a more realistic value. Now, for me, options trading, I usually buy out of the money options. I usually don't buy in the money options. Now, if you go to in the money options, if you get on here, you can see all these are in the money options. They range from $343 to the most expensive one is $1,145. Me personally, I don't buy those, but whatever floats your boat on that, and whatever your price range is, you know, between uh, price difference between the one that I suggested, which is $208, and $143 is a little over $100 difference. So you know, everyone's price range is different, and everyone's financial situation is different. So if you can afford the in the money options and you think it's a better one, then be my guest and go for it. I have no problems against that. But just for me, as far as my budget, I like to buy the cheaper options, and try to buy them more intelligently, because it makes me think about it more. So going to my number two pick for options, it's going to be ticker sign DG, and this is Dollar General Corporation. So their moving average 50 is $157.08. The moving average 200 is $149.81. If we go and look where they ended on Friday, they're at $158.38. So they are above their moving average 50, and they're above the moving average 200. So going into DG, they do have earnings in 4 days, so look forward to that. Going to their 5 day chart, we can see they had a lot of volatility. They started that 5 week chart, that 5 week span at $151 and ended at $158. But in that span, they actually went up to $161 or $162.67 and went down as low as $152.27. So, a lot of fluctuation when it comes to that price, but it seems like, they're kind of on a breakout now since about Friday. Yeah, since about Friday, they broke out from where they were at 154, and started going up to 158.53, which is where they currently ended. Now, going into some press releases from there, we can see on the 7th, they announced that Dollar General expands presence to 45 states. Now, if you guys aren't familiar with Dollar General, they're solely well, I guess not solely. They mainly have majority of their locations in Tennessee. So, the fact that that's where their headquarters is at, Goodlettsville, Tennessee. So it makes sense that a lot of their locations are in Tennessee. They're sprinkled, throughout Tennessee. They're basically everywhere in Tennessee. Um, you know, in the most random places in Tennessee, you'll find a Dollar General if you come to Tennessee. So, um, this is good as far as expansion goes, and I think it's pretty good for the company. So, you know, expanding their national presence is always a good thing because they've done pretty well in Tennessee, and I think they're going to continue to do good. The more places that they go to, because I think they are in really good locations. For the most part, the locations that I've seen them in have been like places where they're not like real big grocery store chains. So they'll be in places where it's like no Walmart, or it's a pretty far distance away to get to Walmart, or places where like they replaced a lot of mom and pop stores with Dollar Generals. So a lot of small towns, but they're also in like big cities. So you know, and their prices are pretty reasonable. So you know I think they're making the right moves as far as locations are concerned, and it definitely shows with their profits. So going into here, this is also showing that they're going to be having their fourth quarter 2019 conference call, and just like the other company, this one they give you the website, and they give you the phone number and passcode to enter when going to listen to that conference call. So it'll be the same as um, the previous company. So you guys that are new investors, you can go and you can listen to the conference call. There'll be questions that'll be asked, and just like the last one, there'll be sometimes they're not going to uh, release the information that was given in the conference call, but they'll, if you listen to it and write it down, then it's information but they'll release the financial information that they're going over, and some of the highlights that they're going over. So if it's something that, a pressing question that you have, and someone asks it during the presentation, then, just make sure you write it down, because more information is given during the calls than during the PDFs. So for that reason, I would say, a call on DG is probably the best course of action. April 3rd, because, that was sort of the time limit for the last one. I think, it's enough time for those press releases to sit in. So they're currently at 158 and climbing. If we go back and look at the chart, so I think a good entry level for them to be would probably be between 185 and 175. So you're looking at $220 per call option, or $158 per call option. So that's the price range between those two. For some reason, this 182 is a lot cheaper than this 185. So I definitely would take that over this one, because a higher this is a higher price. Well, a lower price. So this is a higher price, and usually higher prices cost you know more than lower prices, but it's reversed on here. So also, one thing I forgot to mention is that these are stagnant prices because the share price is stagnant. So all these prices fluctuate based on the price of the stock itself. So if market comes on Monday and it opens up, then the share price will change. So let's say it goes to 160. If it goes to 160, then 160 will become in the money option. It'll no longer be an out of the money option. So its price will actually jump up, and it'll be worth more. But this strike price will be different. So bear in mind the strike prices when you're going to invest in options. So bear in mind the 180, and bear in mind the 185, and bear in mind the 175 when it comes to trying to get a good entry into an option call, because these prices are going to stay the same, but these prices will change. So it'll either change to be cheaper or it'll change to be more expensive. So it's all about timing when it comes to that, and who knows what's going to be when the market opens. So for you new investors out there, just bear that in mind. The strike price are the ones that I'm suggesting: 175 and 185. The price for the actual contract itself, those are going to fluctuate. So, you may be able to get in at 158, or it may be cheaper. It may go to 130 because the stock price goes down. Who knows when the market opens? But just bear that in mind in case you guys are going there and be like, well, I thought it was going to cost $158 and I took out $158 because, I was going to set that aside to buy this option, and now it's saying it's $200. That happens because it's based off of the share price. So just bear that in mind. And also make sure you do your own due diligence when it comes to stocks. I'm not a financial advisor, so I'm just a common person who invests in stocks, tries to give people information on better plays in the market. Try to point people in the right direction as much as possible. Just showing the point of view from an average investor, because most of the times people tell you, put away $1,000, and then you'll have a good place to start trading. But putting away large sums of money doesn't teach you how to trade. So there's no point of doing that when you can start off with a smaller amount of money and then learn how to trade, because learning how to trade is the most important part of trading, and not just handing your money to somebody and telling them to trade with it. So learning is the most important part. That's why I recommend books down in the description below, um, because the more you learn, the better equipped you are to make those gains, and that's the whole point of it, is to make money. So going to my number three, we have ticker sign ADBE for Adobe Systems Incorporated. Their moving average 50 is $351.98. Their moving average 200 is $305.19. So if we look at where they ended on Friday, they're at $336.77. So they are below their moving average 50, but they are above their moving average 200. So they're kind of right, in the middle, kind of closer to the moving average 50 side. So they have earnings in 5 days. Um, Going to their 5 day chart, we can see they've been on quite a lull. They've gone down quite a bit. Um, they were up at 363. Uh, they spiked twice at 363. They've gone down all the way to 336. So, you know, they're kind of on a little lull, but they tried to spike back up, but they're kind of on a bounce after they had this 364 peak. Now, this is an old article from them, but it says Adobe surpasses $11 billion in annual revenue. Um, and this is their fourth quarter. Adobe reaches a record revenue of 2.9 billion in its fourth quarter, fiscal year 2019. Digital media segment revenue was 2.08 billion. Cash flow operations was record 1.3 billion. A remaining performance obligation was 9.2 billion. Adobe repurchased approximately 2.8 billion shares during the quarter. So what does this all mean? I'm glad you asked. That means that I would try to put a put out on the company. Um, Now I'm putting a put out just for the simple fact that I think that the company um, is not going to be doing that well, especially with people, being at home more, uh, thanks to, what's going on in the news. Um, I think that people are going to be at home more, and Adobe's not going to have the demand that they usually do. So, you know, I think a put is probably the best option. Now, with puts, it's the reverse. So, these are the values that you think that it's going to reach to because it's going down in price instead of up in price. Calls are the reverse. So calls, all the in the money options are above here, all the out of the money options are above here, and all the in the money options are down below. On puts, the way Robinhood is set up is actually the reverse. All the in the money options are at the top, and all the out of the money options are on the bottom. So just bear that in mind when you're buying calls and you're buying puts, because it can be very confusing. Just remember what a call is and what a put is. A put is you believe that it's going to go below a certain price. So $335 and $337. $335 is definitely lower than $335. So you're wanting it to go down this way, and that's why these are cheaper than these, because it has already reached past $337 at $336. So just bear that in mind. When you're looking at Robinhood, it can be a little confusing because the chart flips on you when you're trying to buy calls and trying to buy puts. So with that being said, I would say between 300 and 315 would probably be a pretty good price, pretty good entry level uh, when it comes to it, because that's $15 from here and then $15 from here. So, you know, these are a little more pricey than the other ones. So we're looking at $1,055 for a put in April, and then we're looking at $1,415 for a put. So those are a little more pricey on the higher end, but I think they're doable for some people. So for the people out there who can afford it, more power to you. Just giving you a range, a strike price on what I think would be a good level of entry for that. So for you guys who stayed to the end of the video, I thank you. And with that, I'll give you a bonus number 4 option for the week. So the bonus one for the week is going to be ticker sign CPB, which is Campbell Soup Corporation. So if we look at their moving average 50, they're at 48.44, and the moving average 200 is 44.82. They ended the week at 51.76, so they're on the up and up when it comes to stock price. So if you look at the company, go to their 5-day chart, it's been a pretty dramatic growth. 45.80 is the price down below that began the 5-day trend, and then it goes up to 51.73 is where it ended the week at. So it went all the way up to 53.66, which is a pretty high number compared to where they started at. But let's dive into some of the company's background information and see what is making these big moves in the company. So if we go, last week they had their um, earnings. So it says Campbell report its second quarter results for Q2. So this says reported GAAP of 2,162 compared to 2,172. And then it says for the 6-month end of January 2020, 4,345 compared to 4,374. So reading some of these, Campbell raises fiscal 2020 adjusted earnings per share guidance to 255 to 260. Net sales were comparable to prior year. Organic net sales increased 1%. ESP for continuing operations of 0.56 decreased 3%, primarily reflecting loss of extinguishment of department. Adjusted EPS of 0.76 increased 11%. So their earnings were not, the best, but I think they were okay considering it's a soup company. But why I picked them and why I put them as my bonus one is because of all the things that are going on in the news, and I think the demand for Campbell Soup will go up as time goes on. I think that will reflect their next earning that comes out, and I think we're going to see their revenue increase dramatically as far as their demand going up. So as their demand goes up, then that means their supply is going to go up, which means they're going to make more revenue in general. So I think it's probably best to put a call out for the company. Now, a lot of people, I guess, don't think that way. So, you know, calls are pretty cheap when it comes to this company, and they're at 51.76. So I think a good entry level will probably be $54 to $56. So if you go to $54 to $120, $130 contract. We got an $85 contract, a $68 contract, and a $103 contract. Now, this just basically tells you that people don't really know how this is going to really perform, but it's also based on this share price. But I do believe in the future that the demand for Campbell soup is going to go up, and that it's a good, long-term play, probably even past April, for a contract, for a call, because I think the demand's going to go up, and we're going to see that with their revenue and growth in the future. So that's been another episode. My top three um, option picks for the week. If you liked it, hit that subscribe button down below. If it helped you, drop a comment in the comment section. And I'll see you guys next time. Peace.